And I think it's really a very bullish signal. It's also it's a signal that I think is a massive contrarian indicator that when we see the public wake up, and I don't know what it is that makes people wake up, but every day we get closer to hopefully an election, I think there's going to be something that wakes people up. I think the potential is crazy. It's really very, very strong. But yes, I have noticed that gold has been down, and usually the days that it's been down, the last few, it's down 20 or 30 or $40, and yet silver is either up or just barely down. And that's very unusual. It is decoupling, and we've seen a lot of decoupling lately.
In today's market recap, silver is correcting back within an uptrend. Silver price is correcting back after rallying during May. The correction is likely to run out of steam eventually and the uptrend to resume. Support at $27.51 may provide the staging post for a bullish revival. Silver price is correcting back after the strong rally in May became overbought and bullish traders unwound their longs. Despite the correction, the short-term trend for silver remains bullish, and given the old adage that the trend is your friend, it is expected to resume and push higher once the pullback ends.
And, how does India accumulate 500 million ounces of silver over the last 2.5 years? And so I think that silver, the rumor is that China, because gold is becoming difficult to get for immediate delivery, and they're selling out of gold so rapidly there, that they've called upon their citizens to make a shift into silver. Maybe it's the retail demand around the world and the investment demand around the world that is hidden to us here as, it's very interesting on a broader scale. If you look at the ETF outflows, they're falling at a 45-degree angle. And yet gold and silver have continued to do very well. Silver holding its own and having these rallies, and overall gold holding its own and in an uptrend. But this all in the face of little to no Western participation, a lot of selling, or the public has been selling at these levels, whether because they need it or because they've waited for so long and are just capitulating, where we're seeing positive real yields on the treasury market, even, whether or not you believe the numbers out of the CPI, that's in this, or out of the Bureau of Labor Statistics, on the CPI, that's irrelevant. Let's just take them at face value. We have a strong dollar, positive real yields, and lack of participation in the West, and yet the price is either stable or going higher on a ongoing basis. Day to day, that'll have variability, but that to me shows that there's a lot of demand elsewhere that we're not seeing, and I think some of it is participation in the East, where the rumors are that the ETFs in China are flush with so much demand that they keep triggering the breakers and have to stop by going up so fast. We still see the arbitrage going on. I looked at the Shanghai price today, and it's $3. It's over $30 again today in China. So there's demand across the globe that I think is really masking that maybe the lack of demand here in the West, and making people say, well, how is this happening? How is it continuing to go up when the public isn't really participating? And I think it's really a very bullish signal. It's also it's a signal that I think is a massive contrarian indicator that when we see the public wake up, and I don't know what it is that makes people wake up, but every day we get closer to hopefully an election, I think there's going to be something that wakes people up. I think the potential is crazy. It's really very, very strong. But yes, I have noticed that gold has been down, and usually the days that it's been down, the last few, it's down 20 or 30 or $40, and yet silver is either up or just barely down, and that's very unusual. It is decoupling, and we've seen a lot of decoupling lately. Just the price of gold and silver decoupling against the positive positive real yields, against a strong dollar, and against outflows out of the ETFs. We go back to 2013 and look at the ETF correlation. If it would go up or down, that would be what the price was doing. Not happening right now. So again, these are all actually bullish indicators if you look at them the right way, for, I think, much higher prices in the future. Shanghai Futures Exchange, their combined daily volume over the past 2 months has increased more than 200%, and now exceeds the average trading volume of the COMEX. And it effectively makes the Shanghai Metals Exchange the second largest and most influential market on the planet, next to the LBMA. And we've seen a tremendous amount of exchange for delivery, where contracts are bought in the West and delivered in the East. And they coincide very often with a smashing of the price, like gold today. They knock the shit out of it, then they buy contracts and they exchange for delivery. And it's interesting because we've seen a tremendous amount of volume go to Brinks Hong Kong. Now, there is a Brinks Hong Kong vault that is part of COMEX and the theory behind it. And there are guys online right now who are saying they assume that it is HSBC either working on behalf of a client or their house account that is knocking down the paper price on one hand, buying contracts and exchanging for delivery, and they go through the OTC market over the counter to Brinks Hong Kong, where trucks meet them, pick up the metal, and deliver them to the Shanghai Gold Exchange. The West is falling prey to their own manipulation, and the East is using it against us. So when you realize the demand in Shanghai has actually overtaken the COMEX, people shouldn't be surprised. I mean, in terms of gold, one day last week, 7,560 gold kilo bars were delivered out. Who the hell has $571 million to spend on gold? Who's going to buy 243 million ounces and deliver them off and then have them sent to Hong Kong? Well, those bars, I guarantee you, are being taken to the Shanghai Gold Exchange, and this is how countries like Iran and Russia are sidestepping sanctions. And this is how countries like India as well, they are accumulating metal at subsidized prices by shorting the paper price and taking delivery across the globe. And you take a look at the Shanghai Metals Exchange, they're offering $3 an ounce higher for silver than they are in the West. This arbitrage, the exchange for delivery, exchange for physical, and then the demand from the public in China, in India, and in the rest of the BRICS nations is enough to, I think, keep the price up. And even against the best attempts of the West to suppress it, you can only manipulate a market for an extended period of time by pushing in the direction that it is going. And these countries that are challenging the West and their markets and the ability to deliver these products at subsidized prices, in and of themselves, even a few years ago, did not have the sophistication or the money to do it, but they do now. And this is what they're doing in a methodical way, not too fast to cut off their nose, to spite their face and shut off this constant funnel of cheap subsidized metals, but just methodical enough to drain the exchanges quietly. And that's really what I think is happening. I think that's what's putting a bid underneath the price. You have huge central bank purchasing. It just came out. Look, 2023 Q1 was the biggest purchase of central bank metal ever, but it just came out that Q1 2024 surpassed it. So the central banks are not giving up, and they're buying it in a methodical fashion, not too fast to raise red flags and alarms, not too fast to crowd them out of their own aspirations, but fast enough to drain the exchanges. We'll all wake up and say, what the hell is going on? And again, I'm here is verbatim. The shortage of physical gold for immediate delivery has led the Chinese government to begin a media campaign urging citizens to purchase silver instead of gold. Demand for physical silver has already been growing strong this year as it's used to manufacture solar panels and other photovoltaic products in India, management and asset allocation strategies. Well, if that's true, and we're seeing this drive to have the Chinese accumulate silver in lieu of gold, at least in terms of the retail demand. Look, you have 1 billion people buying silver. It's going to affect the price and even affect the ability of the West to hold it down, where these naked short positions are going to be in very big trouble one day if this continues and you start to see Western participation or some sort of an event that wakes people up. So, you got Modi, Prime Minister Modi last month announced a rooftop solar scheme to benefit 10 million households, an attempt to deliver up to 300 units of free electricity each month to Core 1 homes in
Today, let's talk about the gold and silver markets, where things are always interesting. Shanghai is going crazy for gold, while we in the U.S. are kind of snoozing on it. But fear not, silver's holding strong despite all the COMEX drama. And get this, there's some serious detective work happening in the gold market. Countries like Iran and Russia are scooping up gold at bargain prices, while the rest of us are left scratching our heads. Throw in some geopolitical tensions and sanctions, and you've got yourself one heck of a a market mystery. Like, subscribe and turn on notifications so you do not miss out our daily videos, and check our pinned comment for some massive sign-up bonuses. Enjoy the episode.
South Africa, Ghana, Senegal, Cameroon, Algeria, Egypt, and Saudi Arabia, each representing crucial regions in Africa and Middle East. Their actions are prompting questions about the future of the US dollar as the world's primary reserve currency, because all of these countries are trying to avoid sanction risk, and they don't trust us anymore. Trust is like a broken glass. You throw a glass against the wall, good luck trying to put it back together. You won't. You can't once you break it. And I think that's kind of what's happening. We have exhausted a good portion of our trust, and it is being found in assets like gold, silver, and oil, which is being remonetized across the globe. It's money. And I think it is taking the place of dollars. It is taking the place of treasuries. And that is what's giving the floor underneath it. And the confusion that the mainstream analysts, the so-called smart people, say, well, you know, how is this happening if the ETF is falling off a cliff? How is this happening with positive real yields? And how is this happening with a strong dollar? That's exactly how it's happening. Those are all three kryptonite to gold and silver, and yet they continue to do well. What happens if you take that away, where they just can't do that anymore, where the illusion of a strong dollar and positive real yields are actually exposed for what they truly are? I think it's a waiting game. And part of the problem in this country is that instant gratification is not fast enough. You know, the world that you and I grew up in, you let the compounding of time and interest work for you. You make investments and build things, whether you're building a business or your own personal savings, with time is the primary factor. Well, that's what these countries have been doing and are doing, whereas the people in the West who accumulate and analyze these markets and accumulate the commodities themselves, maybe people watching your show, are wondering, well, how is this happening? Because they're used to making money so fast that the waiting for all of this to happen is enough to make them capitulate. And I understand that. I get it. Intellectually, I do. But it's the wrong thing to do at this point. And that's why I talk about little by little by little and bang all at once. When is that bang? I don't know. But the little by little, if you look, you can see it's happening as all of these metals and all of these commodities are flowing eastward, slowly, methodically, without much fanfare. You know how hard it is to get this information? I'm reading websites in India. I'm reading websites in Russia. I'm scouring Twitter. I'm scouring Zero Hedge. I'm reading websites in the Middle East. I'm spending 4 or 5 hours a day, every day, like you do, to stay on top of this stuff. It's not easy, and the Western media ignores it all. And that's why people don't get it. And that's why the participation is what it is. And that's why it is a forgotten, ignored commodity. But that falls right into the hands of the countries who are accumulating them all. The ones that produce it, the ones that accumulate it, and the ones that understand what it really, truly is. In Zoltan Pozar's world, Bretton Woods 3, a system that will be explained by commodities and transparency. It's happening. And the rest of us are asleep at the switch, trying to chase returns on overextended, over-accumulated, oversold NVIDIA stock or Bitcoin or whatever that has made a lot of people wealthy. Get it, but they're missing the whole theory behind what's happening with metals prices. And it's not lost on these countries that are slowly, methodically draining the exchanges. Why else would Shanghai have silver priced at $3 an ounce higher? If they really wanted it all, they could price it at $30 higher, and bang, like that, everyone would wake up. Whoa, let's sell what we can to Shanghai. Those traders would arbitrage, and then it would be over. But at $3, and the West doesn't talk about it. You know how many podcasts I do, and people say, how the hell are you getting that information on that Shanghai is? I look everywhere, I can't find it. Well, it's a guy on Twitter. It's this, what's it called? You know who I'm talking about? It's the Silver Ghost. Yes. And he's the only one who has it out there, but he publishes it every day. It's the only place I've ever seen it. The point of it is that the information that people need to know it's not being up at the switch, completely and totally asleep at the switch. And whether it be the ETFs that have fallen off at a 45-degree angle or the people that are selling their metals, yeah, it has happened. And I don't know if it's a combination of tough times or capitulation or just, people need to sell. There's some of all of it. But it's true. It's real. And it's a contrarian indicator as far as I'm concerned, because the opposite is happening across the globe. It's a mirror image of one another. And to your point about the sanctions and the SWIFT, in the last year, the CIPS, the cross interbank payment system, Chinese CIPS, has done 35,740 transactions worth about $17 trillion. That's off of SWIFT. So the little by little by little, the chipping away at the dollar hegemony, settling all these trades on a different platform, settling these trades in local currencies, taking the excess and putting them in gold and silver and oil instead of treasuries. This is all chipping away at the settlement value and the reserve value of the dollar and the treasury market. Little by little by little, the Chinese are down to 700 plus billion in treasuries from 3 trillion. Little by little by little, they are accumulating commodities instead of opaque debt promises. And at the same time, our public is lining up to sell. It's sad, but look at the take this out a little bit further, and you see exactly where this could lead. And I think it'll be unfortunate before it really, when the COMEX loses its ability to set price, and it's set by the other nations who have all the metal, and the COMEX is like the broken glass. It's lost. People have lost their trust in it, because last I looked, your buddy who you're very close with, who publishes the great numbers on registered and eligible and the rehypothecation, who I would have loved to have had a beer with when he was in town with you a couple weeks ago. Next time for sure, please. The other day I noticed it, he's saying silver is 15, 16, 1700% rehypothecated, meaning those contracts are sold 15, 16, or 17 times over. So if there's 1700% rehypothecation and everyone who has a 5,000 ounce contract of silver stands for delivery, well, what does that mean? That means one person gets settled and the rest is cash settled. Or to do it another way, in one of his last numbers, I'll just get to it here real quick, he showed roughly 45 million ounces in registered. So take 45 million and multiply that times 17, you have 765 million ounces worth of contracts, paper, backing 45 million ounces in bars. Well, this is all creating distortions that won't end well, and the rest of the world is using it against us. So at the wrong time, people are lining up to sell because of things like rehypothecation, because of things like not reporting the facts, because of things that we are seeing across the globe that no one really is hearing about, including, arbitrage going on in the Shanghai Metals Exchange, or, massive exchange for delivery coming off for physical coming off of the Western markets and being delivered to Hong Kong, which ends up at the Shanghai Gold Exchange. All of these things are not readily known. It should be talked about on Fox News or Fox Business or CNBC or 60 Minutes that the normies watch, but it's not. And that's why it will end badly for a lot of people. That's why I hope people are getting something out of these interviews that you and I do, and gleaning just a little bit of insight, inspiring them to do their own due diligence and dig and see for themselves that you can't continue to manipulate the world and be coercive in nature without there being pushback. And for most of our lives, the West was too dominant in every way, militarily, financially, economically, everything. And that's changing rapidly. And that's why I think you're going to start to see this phenomenon spin faster and faster and faster and faster as we get closer to some sort of a break point. Don't know when that is, what that looks like, but I know it will come. Something will break. And my guess is it will do so long after the big money has positioned themselves, and the people will scramble for whatever is left. And I talk about low premiums and great availability. That'll be the last thing that you'll find in that environment. And I'm dead serious. I mean that to be gospel, to mean that to be truth. So for whatever it's worth, I go on record saying that's where I think we're heading.
What do you think of Andy Schectman's take? Is the United States in trouble? Will Shanghai gobble all the gold and silver and raise prices massively? Post in the comments section down below your honest opinion, and watch this video right here because it's a perfect fit for you. I see you on the other side.